All right, everybody. It's Monday. What is today? January 27th. Hey, remember, it's Monday. Sent out the new edition of MMT Trader, so go to my website, sign up for a 30-day free trial. The link is in the description right here below. So go ahead and check that out. A lot of good information in there, a lot of good information. I want to talk about something, and it's something that I mentioned last week. I started to get into it. You know, a lot of you, for a long time, you called me perma bull or whatever. You thought that I was a one-way bet on the market, and I've explained so many times that for me, first of all, it's not about predicting where the market is going to go. It's about predicting basic conditions of the economy. If you know what the conditions of the economy are, if the economy is growing, if the economy is not growing, then you could strategize from that. For example, what's going to happen with the stock market? What's going to happen with bonds? What's going to happen with commodities, with oil? It all comes from basic conditions. The mistake that most people make is, trying to guess which way the market's going to go. The market will follow, all markets will follow basic economic conditions, and you have to get a handle on that. And of course, because of my understanding of MMT and what I teach to people and what I bring to people in terms of the value of that knowledge, they're able to have a much firmer grasp on policy, the impact of policy, all that stuff. I've been talking about that. Anyway, getting back to my point, I stayed bullish on the economy and I stayed bullish on the stock market because basic conditions dictated it. Policy was correct in the sense that it was going to cause the economy to grow. So you have to be bullish, and we were buying every dip, right? You remember that? We were buying every dip, going back to some of the crazy ones too. Like at the end of the fourth quarter in 2018 when everybody was panicking and crying and they were jumping out of the market, and I said, no, that is a buying opportunity. And it wasn't charts that were telling me that. It was like I was seeing in the metrics, banking metrics, credit, the fiscal situation, all that stuff was telling me at that time you had to get back in. And we got back in. So last week I started to talk about what I term, and this might actually be the term, but I'm calling it the reverse stabilizers. I talked about automatic stabilizers, things like Social Security and Medicare and Medicaid and unemployment benefits and veterans benefits and food stamps and all those kinds of things. When the economy slows down, and particularly in a recession, those payments expand. More people on unemployment getting unemployment benefits because they get laid off, people on food stamps, some people opt to retire, so Social Security rolls grow. Medicaid, Medicare, all those things, that's a safety net under the economy. They necessarily expand in a contracting economy, and it provides a support at some level, and it stops the downturn. But you kind of have the same thing on the upside. So when the economy grows, more taxes are paid to the government, and there reaches a point, there's an inflection point where the tax flows to the government exceed the rate of spending. So in other words, another way to say that is that the income flows from the government to the non-government, right, the private sector, grow slower than the income flows from the private sector to the government, those taxes. And I think that's where we are right now. Certain things are telling me that, and that's bad. That's like if you think of a car moving along at a certain speed and you press the brake, that slows the car down. And depending how hard you press the brake, the problem is with this reverse stabilizer effect, the brake keeps getting pushed and pushed and pushed. So it's not just that you slow the car down, you eventually slow the car down to a point where it stops and maybe it starts to go in reverse. So what do? Well, you have to cut taxes at that point to take the foot off the brake. But that's a policy decision. That's something we'll know. Like maybe Trump is he mentioned something about a middle class tax cut that he's going to propose in 3 months or something like that. And I'm sure that is time for the election. But we'll see. that has to be proposed, that has to be voted on. I mean, you know, it doesn't just happen overnight. In the meantime, the foot is on the brake pedal, and that's no good. And there's things that I'm seeing. So, which leads me to say, and I'm not 100% certain that we're there yet or this is happening, but the evidence is starting to pile up. I got to tell you. So what does that mean? It means that this is not your ordinary garden variety correction in a bull market. I mean, if this keeps going like this, and if I'm right about this, this is a bear market, or will develop into a bear market, and not the kind of bear market that we always hear people screaming about, which is not really a bear market. They're just mislabeling it a bear market. Those things were just corrections in bull markets that you had to buy, right? Like I told you, you had to buy it. This is a real bear market if this is what's happening. If the reverse stabilizer effect takes hold, and again, I mean, the evidence is kind of piling up in that direction. You know, I've been talking about bank credit, right? More evidence of that now. We have the, you know, commercial and industrial loans, like barely growing year over year. Credit card loans, in the most recent data that just came out on Friday, down by the most in 2 months. Residential real estate loans, down by the most in 2 months. Automobile loans, which they were that was like my secret barometer of the economy. I mean, those things were just going gangbusters. You know, they're up like that. The most growth in 37 months or beyond. That thing had the smallest increase now in 13 months. Okay, it's still an increase, granted, but again, signs of a slowdown. So we're keeping an eye on this. Anyway, all this stuff is in this week's report. Go to the website, pitbulleconomics.com. Sign up for a 30-day free trial. By the way, if this is happening, right, you need to know the strategy, right? I mean, you need to know what to do. What, are you going to sit there like a deer in the headlights as the market goes down? Are you going to short the market? Do you know how to short the market? Do you know when? What is the best strategy to pull that off? I mean, you got to know all these things. Again, it's not about predicting the market, folks. It's about understanding basic conditions. That's what it's all about. All right, everybody. Go to the link right here in the description. Click on the link. Sign up for a 30-day free trial of MMT Trader. See you tomorrow. Bye-bye.